Japan is undergoing one of the worst economic crises it's ever seen. Buckle up as we delve into the heart-pounding twists and turns of rising debt and negative GDP growth in the land of the rising sun. Picture this. Japan's national debt is so colossal that it makes Mount Fuji look like a tiny molehill. With a debt-to-GDP ratio of over 250%, it's safe to say that Japan has taken the concept of borrowing to a whole new level. In fact, if they stacked yen bills on top of each other, they could probably reach the moon and back, as some witty economists claim. With such a colossal debt burden, there's a constant fear that Japan's economy could collapse under its weight, dragging the nation into a deep and dark abyss of financial ruin. But here's the twist. Despite the astronomical debt, Japan managed to keep its head above water. How, you ask? Well, it's partly because a significant portion of Japan's debt is held domestically. Japanese citizens and institutions are among the biggest holders of Japanese government bonds. It's like owing money to your next-door neighbor. Sure, it's still debt, but at least you can borrow the neighbor's lawnmower in return. Another factor that has helped Japan navigate its debt maze is the low interest rates maintained by the Bank of Japan. The central bank has been keeping rates at rock-bottom levels for quite some time, making it easier for the government to service its debt. It's like getting a loan with a ridiculously low interest rate, allowing you to make your monthly payments without breaking a sweat. However, it's not all sunshine and rainbows. The massive debt levels have constrained the government's ability to invest in key areas such as infrastructure, education, and healthcare. You could say that overall, Japan's debt situation is like a high-stakes poker game. It's a risky gamble, but so far, Japan has managed to stay in the game. If you thought walking a tightrope was nerve-wracking, try balancing an economy with a rapidly aging population. Japan's birth rate has been declining faster than a speeding bullet train, resulting in a disproportionate number of elderly citizens. As the number of retirees swells, the workforce shrinks, putting a tremendous strain on the economy. Productivity and innovation have taken a hit. Japan's declining birth rate means there are fewer young people to support the growing population of seniors. It's like a game of musical chairs, but with fewer chairs and more dancers. This demographic shift is straining the country's pension system, healthcare services, and even the traditional family structure. On the bright side, Japan's aging population has sparked a surge in silver industries and innovative solutions tailored to seniors. From technology advancements like robotic caregivers and smart homes to unique products and services catering to the elderly, it's a silver lining in the silver-haired cloud. Who knew that walking canes and hearing aids could be so trendy? In conclusion, Japan's aging population is both a cause for celebration and concern. It presents economic and social challenges, but also sparks innovation and cultural transformations. Japan must adapt and find innovative ways to support its seniors while harnessing the wisdom and experience they bring to the table. Abenomics was the economic superhero who promised to save Japan's economy from its sluggish state. But did it soar high like a majestic phoenix or crash and burn like a faulty rocket? Let's dive into the world of Abenomics and explore how this well-intentioned plan fell short of its great ambitions. Shinzo Abe, the former Prime Minister of Japan, unveiled Abenomics with much fanfare, hoping to jolt the country out of its deflationary slumber and spur robust economic growth. The three arrows of Abenomics, monetary stimulus, fiscal reforms, and structural changes, were meant to form a formidable quiver of economic revival. It was like aiming for a bullseye in a game of economic darts. The first arrow, monetary stimulus, was perhaps the boldest move. The Bank of Japan, under the guidance of Abenomics, unleashed a torrent of yen into the economy through aggressive quantitative easing. However, despite the flood of money, inflation remained elusive and the impact on the real economy was limited. It was like trying to inflate a balloon with a leak. No matter how much air you blow, it just doesn't quite fill up. The second arrow, fiscal reforms, aimed to rein in Japan's colossal debt while creating a more sustainable fiscal path. However, the progress in reducing the debt burden was lackluster at best. The measures taken were often seen as insufficient, and the debt burden continued to weigh heavily on Japan's economy. Finally, the third arrow, structural changes, sought to ignite growth by promoting innovation, deregulation, and increasing female workforce participation. However, the pace of reforms was slow and lacked the necessary boldness to bring about transformative change. Despite the initial optimism surrounding Abenomics, the results fell short of expectations. It was like embarking on a journey with a broken compass. The destination remained elusive, and the path was riddled with obstacles. The Bank of Japan became the magician of the economic circus, pulling rabbits out of hats and performing extraordinary monetary tricks. It unleashed a torrent of yen into the economy through aggressive quantitative easing, trying to breathe life back into the markets. However, as the dust settled, it became evident that this torrent of yen failed to achieve its intended goals and left the economy grappling with its own set of challenges. The idea was to flood the market with liquidity, encouraging businesses and individuals to spend and invest, thus reviving the economy. It was like pouring fuel on a dying fire, hoping to ignite a blazing inferno of economic growth. The expected increase in consumer prices and the subsequent rise in inflation simply didn't materialize as anticipated. Instead, Japan found itself caught up in deflation, a persistent decline in prices that hinder economic growth. The flood of liquidity also led to a surge in asset prices, particularly in the stock market. While this may have initially boosted investor confidence, it also contributed to growing wealth disparities and an inflated sense of asset values. On top of that, the torrent of yen created concerns about the sustainability of Japan's debt burden. With the Bank of Japan buying up a substantial portion of government bonds, there was a worry that the central bank was effectively monetizing the debt. All in all, the Bank of Japan's torrent of yen into the economy, though well-intentioned, failed to achieve its desired outcomes. The anticipated rise in inflation did not materialize, and the transmission mechanism of increased liquidity to the real economy fell short. The Olympic gamble, a high-stakes bet that Japan placed on hosting the prestigious international event amidst a tumultuous economic landscape. It was like rolling the dice and hoping for a winning combination. However, as the dice tumbled and the games unfolded, it became clear that this gamble had both triumphs and setbacks. Japan invested billions of dollars in preparation for the Olympics, building state-of-the-art facilities, improving infrastructure, and enhancing the country's image on the global stage. It was like giving the economy a shot of adrenaline, fueling hopes of a significant boost in tourism, consumer spending, and economic activity. The anticipation was palpable, with the nation eagerly awaiting the influx of visitors and their pockets full of spending power. However, fate had a different plan in mind. The COVID-19 pandemic struck, casting a dark shadow over the world and plunging the Olympics into uncertainty. The Games had to be postponed, and stringent health measures were implemented to ensure the safety of athletes and participants. The absence of international spectators left Japan's economy yearning for the cheers and cash flows that usually accompany the grand sporting event. We see the need for contingency plans and flexibility in the face of unforeseen events. The Olympic gamble may not have yielded the anticipated jackpot, but it left an indelible mark on Japan's journey, a testament to its resilience and unwavering spirit. Amidst the twists and turns, Japan's economic journey towards recovery is a story of resilience and determination. The country faces the challenge of reducing its enormous debt burden while fostering sustainable growth. Structural reform should continue to be a priority, with an emphasis on boosting productivity, encouraging entrepreneurship, and harnessing the potential of emerging industries. The road may be long, bleak, and full of thorns, but a little persistence and luck could get Japan back on track to economic growth soon enough. Thanks for watching, and we'll see you again soon. Make sure to watch the next video.